Good morning, good afternoon, good evening from wherever you're watching me on this club. This is part three of the series of why the Kenyan government and the Kenyan president are so powerful. In this episode, this part three, let's talk about money. Let's talk about the taxes. So, there are three ways. There are three ways the government can get money. So either they collect more money using taxes, or they print more money, or they borrow money from outside. So the options, the second option of printing money is devastating to the economy because it causes what is inflation, whereby there will be too much money in circulation chasing few goods, and a lot of people will not get a pay raise overnight. And if there is too much money, people will have that more money will offer to pay more for the same amount of goods and services, and therefore throwing the other people who doesn't have enough money out of business. So people without money will end up being like not able to buy or afford basic things. So let's see how does the government print money, for example. So before we dip into that, let's look at the banking system. So how do banks work? So a bank is like a company that promises you that if you deposit your money with them, it will be safe, and you can access that money whenever you need it. So if a lot of people go to the bank and deposit their money, that bank, instead of sitting on that money, it can lend that money to other people who are interested in getting a loan at a higher interest than the interest they are offering you when you deposit that money. So banks normally should not be able to sit on your money, let it stay in their vaults until when you need it. They lend that money out such that that money is earning interest to the bank, and when you come back and demand to withdraw your money, at least they will have made some interest using your money, because at least they are also holding somebody else's money who is not interested in withdrawing that money when you are trying to withdraw it. So if all of you come at once and demand to withdraw all your money, then that will put a bank into a financial stress, and it can collapse that bank. And that is why you have heard that banks have undergone bankruptcy, for example. So to prevent that, they came up with a system that banks came together, and they formed a board, and that board opened one common bank, one big bank called the central bank. And in our case, the Central Bank of Kenya. Here in the United States, it's called the Federal Reserve. So the Central Bank of Kenya, in the Central Bank of Kenya, the interest the banks make from lending their money to the general public, they normally deposit that interest with the Central Bank of Kenya, such that each individual bank in the Republic of Kenya should have an account with the Central Bank of Kenya. And that is why you as a person, you don't have an account with the Central Bank of Kenya, and you cannot get one because you are not a bank. That one is a bank that operates accounts for other banks. So where does the government come in? So the government, as much as the Central Bank of Kenya is supposed to be a private institution, it's the president who anoints the governor of the central bank. And that central bank, because the president is the one that anoints that central bank, they work alongside with the treasury to have the central bank have the capability to print money. So that is why whenever you look at any currency that you look at, any currency that you might have in your pocket, it has like a seal, like the Central Bank of Kenya. So it's the president who appoints the governor, but the central bank is supposed to be a private institution, and they are now given the power to do the printing of money. So they are the ones that controls the amount of money in circulation. And if the president says, I want more money, if he cannot collect it through taxes, when he borrow from the central bank, which is a private institution, he talks to the department, one of his ministry, Department of Treasury, in the Ministry of Finance. So Department of Treasury will go to the Central Bank of Kenya and say, hey, we need this amount of money so that the government can be able to provide this and that service. What the Department of Treasury will do, it will print certificates, like it's like a promise. Like, okay, if you give us that money, we will spend it and we will pay back. That promise is like, it's a promise that the government has promised the central bank that it will refund. So that central bank sitting on that promise in the form of like something like a certificate. So the central bank can work with the other banks to sell that loan because they loaned the money to the government, and that loan is what is called the government bonds. So if you go and buy a government bond, you are lending your money to the government. So the government have a responsibility to pay you back plus the interest that loan will incur. So if another bank, let's say for example bank X, all people pops in and they all want to withdraw their money, what happen is that bank will say, okay, we don't have that money, but if you give us a moment, we will get a loan from our big bank, that is the central bank, and we will give you that money. So that one helps in keeping all the banks afloat, such that at least if all of you goes and want to withdraw all your money, at least the bank doesn't go bankrupt. It borrows the money from the central bank, and it's the central bank that will set the interest rates, like how much you're supposed to pay as a bank, how much you're supposed to pay the central bank back in terms of interest. So if borrowing from the central bank have like very, very high interest rates, then if you as an individual, you're trying to borrow money from the bank, then the bank will have to set another higher interest rate such that it can afford to pay back to the central bank and still make money. And that is why borrowing in Kenya is just through the roof, because the central bank have like a really high interest rates, and the bank have even to charge higher, such like an 18 to 21%. That's crazy. Here in the United States, the loans usually go to around right now they're around 6 or 7%, especially for the mortgage. But for like the ordinary loans, that one can go up to 20 or 22%, depending on what you agree with your bank. So as we have seen, the government through the Department of Treasury can take a loan from the central bank, and in return it promises the central bank that, okay, we will pay back with this interest. So the central bank can take those loans and sell them to the public through what we call the government bonds. So if you buy a bond through like those stockbrokers or banks, if you buy those bonds, you are basically buying the government loan, hoping that it will refund that to you. So if the government cannot collect enough taxes, then it has to borrow more. So the problem now becomes, if that money is not used wisely, like if whenever it's redirected into a certain ministry, people don't do whatever it's supposed to do, they put pressure on people, or they put pressure on the government, and the government has to like increase the taxes in order to cover and pay back the loans that it already owes. And that is the problem with the budgeting, because when the government presents the budget to the legislature, that is to the parliament, the parliament can say, oh yes, okay, yeah, we approve, you can do that, you can go to war in Somalia, you can send soldiers in Haiti, you can do all that. But when it comes to collecting the taxes, if the legislature says, okay, yeah, collect the taxes and cover that expenses, now that tax burden goes to people. And when it goes to people, if they are pushed so hard, it becomes hard for them to say, okay, well, okay, yeah, we will pay more taxes. So that is why there is a major problem, because the government have already borrowed more, and they needed to pay it back. But now the tax strategy that they have of collecting the money back is backfiring on them. So in the next episode, we're gonna talk about other strategies that the government can use.